Hello, this is Si Wing Yi from the Yi Real Estate Network. I'd like to share with you another urgent message. I mean, this is really breaking news. I mean, the real estate market is moving so fast. It's really very hard to keep up. I'll be honest with you. So I'm going to play this short video so you can see really what's going on in today's market. Right now, we are almost concluding the first quarter of 2021. And I'm going to talk about as a real estate investor, you need to understand what's really going on and set your expectations and create some urgency. Put your ducks in order because there's so many challenges going on right now. But at the same time, there's some tremendous opportunities. All right. So it's all about having the courage to take action, buy real estate and wait instead of wait to buy real estate. Now this this video is a short video. It kind of recap everything I've been analyzing about. So it's a very 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 good video. So just listen for a few minutes and and then when this short video is done, let's kind of allow me to recap as to what are some of my thoughts. All right. So without further ado, let me share the screen. Let's get it going. Here we go.
Well, a disappointing print on the housing market out this morning. Existing home sales falling more than expected in February to reach a 6-month low. Sales of previously owned homes dropped 6.6% month on month to a seasonally adjusted annual rate of 6.22 million. We should note that that was the first monthly drop that we've seen since November. Now, joining us now to discuss is Daryl Fairweather, Redfin chief economist. Daryl, thanks so much for being with us. And I want to start things off with that existing home sales print. The second print that we've seen really disappoint against economists' expectations in the past week. We also had a disappointing print on housing starts last week. And do you really chalk this up to a temporary factor, the result of harsh winter weather in February? And where do we head from here when it comes to the strength of the housing market?
Thank you for having me. I think that these supply problems are going to be long lasting. There were some short-term shocks in February, like the weather, but there's a real problem, which is that there aren't enough homes for sale. There isn't enough new inventory coming online through new construction, and lumber prices are so high right now. I'm not too optimistic about that changing. And also, people don't want to move because they're so afraid of facing this incredibly tough seller's market when they become buyers.
Hey, Daryl, Brian Chung here. So how is rising mortgage rates kind of changing the supply and demand equation, right? Because even though the Federal Reserve hasn't lifted short-term interest rates, expectations about them.
Do you ever wonder you need a limited liability company or a corporation for your real estate investing, or maybe you should just
future have a deep lifted 30-year borrowing costs. So has that changed the dynamics in the market so far?
You know, mortgage rates have gone up. I don't think they've gone up enough to really change the dynamics. We're still seeing the same problems of not enough inventory and a lot of buyers out there for the little supply of home that exists. I think later on, as mortgage rates start to go up even more, there'll be even more of this inventory problem because people who locked in really low mortgage rates will have another reason not to move.
And Daryl, taking a look by geography, we saw that home prices in cities grew much faster than suburban as well as urban areas for the first time since the start of the pandemic. I'm wondering if you see this trend also continuing and what that means as we start to see this work from home phenomenon start to abate in the coming months.
With work from home, people have a lot more options of places to live, but I think people are looking towards the future and seeing that restaurants may be open soon, entertainment venues may open, and they want to be in more urban areas. But they're looking especially at affordable urban areas. Places like Nashville, Tennessee, or Austin is more affordable compared to the Bay Area. Those are going to be really popular moving forward because you get a more affordable home, but you get all of the amenities.
Now, a question is about, at least in some of the high pressure areas like the New York metropolitan area, the Los Angeles metropolitan area, are bidding wars, right? You hear these horror stories of people putting in 25, 30% above asking price and still coming in third or fourth in the bidding process. Has that kind of just has the pressure there kind of been relieved over the past few months, or is it still as elevated as it was in the midst of the pandemic last year?
It's still elevated. The market is really tough out there, especially for first-time home buyers or people putting lower amounts down as down payments. It's really hard to compete. And a lot of buyers just don't have the stomach to put $50,000, $100,000 over asking price as their offer price. So it's really the experienced people who are willing to do what it takes, put in a strong offer, maybe the day that they see the home, that are winning right now.
And just in terms of where things are heading, going back to the question that Brian had around mortgage rates, do you see those expectations potentially driving a pull forward in demand as buyers try to get in before things start to get even higher down the line in the next 6 months, next year, and 2 years?
I think that's already happening. I think the reason that buyers are so eager to make strong offers now is that things are going to get more affordable later in the year. Home prices just keep going up. Mortgage rates are going to likely go up. So if you wait until later this year or next year, you're probably going to end up paying even more. So that's why people are just willing to put in those strong prices.
Is there any sort of detail on the types of home builds that are going up right now? Obviously, it's going to differ by geography, but it seems like everyone wants to get more space as opposed to less space. So instead of kind of multifamily, large kind of duplex complexes, is it a lot of single family builds in certain areas, or is it really kind of different depending on where you are?
People still want this.
Okay. Oh, wow. This is I really love this video by this Redfin economist. Wow, it just kind of recap everything that I already know about, right? So, yeah, this is crazy, right? I have never seen where the inventory is so low, is record low. Now, 6 months of inventory is a normal market. And many markets in which we are selling investment homes to our investors, they have an inventory of less than 1 month. Think about that. Inventory about 2 weeks of inventory in several of the market that we're working on. This is amazing. And if you are playing the resale market, right, the resale market out there for the public to view, I mean, you are involved with the bidding wars, multiple offers, 30, 40, 50 offers for one house, right? And you're overbidding by 10, 20, 30% above asking. This is crazy. So as an investor, as real estate investor, yeah, new builds is the best way to go, especially new builds where we have access to the builders. We have an exclusive relationship with the builders that are bringing our investors new builds homes, single family home, duplex, and even fourplex, new construction, where you're not bidding against the public. I mean, the lots are available only for our investors. You pay the price that are listed. There's no, our builders are not like others. Still, some builders in different part of the country whereby you have to, there's a lottery system, right? You put your name in a hat, right? And you have to, they pick the name out of a hat, and you get the lot on the pre-construction. And some builders are completely closed to investors. Real estate investors cannot buy houses with certain builders in certain markets, right? In many markets, really. And also, some builders are like, they release maybe 10 lots on a monthly basis, and then to the public, and you may see 200 to 500 potential buyers, just bidding for these 10 lots. I mean, it's so build to rent business model that we're practicing it really works. So I mean, I'll be honest. I mean, because you're part of my network, the Year Network, we have direct access to builders that will give us the inventory. Having said that, inventory that are available are very, very limited. There are the lots are not enough of those lots to go around with our investors. So you need to create a sense of urgency, all right, and pull the trigger. Now, another takeaway from this video is that some of you are thinking, or maybe analysis by paralysis, you're thinking, I wouldn't wait. This Redfin economist, she said, the inventory is so low that in next 1 to 2 years or even more, you're not gonna even achieve the level of supply necessary to make it a normal market condition. So this is a seller's market. When there are more demand than supply, the real estate price is gonna go up, right? So if you think about a crash or bubble or correction, don't fall into this kind of trap. Okay, when you have when demand equals supply, or greater than supply, how is this going to rise? So the only way that the demand is decreased if perhaps the interest rate is raised dramatically, and we do not see in the next couple of years the interest rate going to be raised that drastically to prevent people from buying properties. So some of the investors that we are working with, they just closed escrow, and during the past 3 months, when the houses are being built, they build a resale price. So, but they lock into the initial lot contract, so they gain equity already during the construction phase, and then quite often in our market in Austin, San Antonio, Southwest Florida, and Central Florida, whenever recently in this past 1 year, really, whenever our investors close escrow, they have received 30 to 40 rental inquiries. People, want to rent a house. So, why there are so many renters? Because those renters are moving from other locations into Texas and Florida, and they're making like $80,000, $100,000 per year, but they need to move, right? They come into the area that we're promoting, in Austin, San Antonio, Southwest Florida, and Central Florida, but there's no home for them to buy. So they have to rent for at least a year. While they're renting, then they slowly try to find a property to buy. There are almost no inventory. 2 weeks of inventory to 1 month, right? In the locations that we're in. It's just crazy. Almost no inventory. Prices are rising. The lumber prices have increased dramatically in the past 18 months. So builders have no choice but to increase their prices systematically. So for the investors that are lucky enough to purchase the property or purchase the lot, right, and wait for the house to be built, it may take 4 to 6 months or 6 to 8 months or even slightly longer because of the delay of construction, lack of supply, lack of construction workers, all those things. So be patient, lock into your price, and just get the equity gain while the house is being built. So that's all I have to say. So this is a unique opportunity. It's very challenging, but so do not go through the analysis by paralysis stuff going on. You're gonna miss the boat. All right. So for those of you who want to wait to buy 3 years later, guess what? You're gonna buy at a price at 3 years, 2 or 3 years later, a lot higher than today's price. See, that's the cost of waiting. Buy real estate and wait instead of wait to buy real estate. So, all right, I will send more videos to you as I see maybe on a weekly basis, the market changing so much. We still have cash flow. Right? You buy, the ideal scenario most of the time is to buy a new construction, single family home, 3-bedroom, 2-bath, around 13 to 1,500 square foot, preferably less than $250,000, right? At $250,000, the gross rent is like $1,900, right? If the price is $220,000, the gross rent like $1,700. If the price is $200,000, your rent could be around $1,650. That's ideal, 0.07%, 0.071% rent to value ratio. And if that's the case, you put 20 to 25% down payment, you will achieve monthly positive cash flow. All right, so thank you so much for your time and look forward to working with all of our great real estate investors. This is Si Wing Yi. Have a nice day. Bye-bye.